And our next round is a pretty interesting round because we have money on stage. Fantastic. We're not throwing money, but we have money in the pockets, hopefully, of those coming here. And I would like to invite Karena Belin again back. She will moderate this group of investors, and she will also introduce them. So welcome to the stage to our investors round, Karena. Yes, please. Here we are.
Very, very heartfelt thank you very much. Yeah, great to be back on stage again, talking about money and investment. And I would like to invite my distinguished panelists. I can see them all over the room actually here. So I can see Vikram, I can see Alex here, fantastic. We have Teddy. Teddy is over there as well, and then we actually have Teddy replacing Jörg. Absolutely, and Shrenik is, I think, just behind you. Absolutely. Well, let's see. Shrenik, I think you're just next to me. Teddy, you're replacing Jörg, and then we have Alex and Vikram. Fantastic. Very good. Please join me in giving them a a very warm welcome, and clap your hands, please, for this distinguished panel of investors. So I just gotta quickly name you by your title, and we had already a fantastic time during lunch to talk about their different funds, their different investment theses, their view on the ecosystems across Europe and Asia, the state of investment and investment ecosystem. And I thought you probably best describe what you do. So just very quickly, so Vikram is the founder and managing partner of IvyCap Ventures. We have Alex from Frankenberg, who represents the high-tech Gründerfonds. He's the managing director. Then we have Teddy, who is the partner of APX, and you will tell us a little bit more about Heartfelt, which is the new fund, super exciting. And then we have Shrenik here, who is the president and head of ABG Innovation Fund, and ABG stands for Aditya Birla Group in India, but multinational company. So yeah, why don't I throw it back to you? And Vikram, you're looking me straight into the eyes. So tell us a little bit more. I'm fascinated about IvyCap Ventures and the whole philosophy behind it. Tell the audience a bit more about what you do at IvyCap Ventures.
So we manage over $530 million, all raised in India. We invest primarily at Series A, about $5 to $7 million average ticket size. We are sector agnostic. We manage about 40 companies today. We are anchored by this IIT Alumni Trust as our anchor investor, which is like a collective pool of the IIT alumni who invested in the fund, in addition to these institutional investors in India, there's banks, insurance companies, government of India who invested in a fund. So I think we take very active lead roles in our investments. We always take board positions. We are a very exits-driven fund. We try to take exits in 5 to 6 years, primarily through M&A. We've done about 7 very profitable exits so far. So that's broadly who we are.
Yes, and actually Vikram is always very, very humble. So you started that in 2008, I think. And what I found really, really interesting is the thesis. And maybe you want to explain a little bit more about IIT for those who are not familiar with India, or the top leading university and tech universities in India, and also that whole alumni network, or the structure on how you source, but also scale companies.
Yeah, so there are about 500,000 IIT alumni who are coming from 23 campuses of the IITs across India.
And it stands for Institute of Technology.
And it stands for Indian Institute of Technology. It's considered as one of the toughest exams to get in. Yeah. It's very interesting statistics when you try to correlate with entrepreneurship. So India has seen about 107 unicorns so far. 66 of them are founded by IIT alumni. Globally, there are about 1,200 unicorns. If you rank them in the order of the background of the founders, even globally, you'll see the IIT alumni founded unicorns ranked number 4th. And even from a full cycle perspective, if you look at the Fortune 500 companies in India, 2/3 of them have at least one IIT alumnus in a decision-making place in these companies. So even from an exit perspective, it becomes a very interesting proposition. So what we've done, actually, as a fund, we said, 25% of our carry that the funds get as a profit, right? The fund managers, that, we said we'll give back to the IITs as endowment. So that also started the whole concept of endowments in India. So we helped set up India's first endowment fund at IIT Delhi to begin with, which was launched by the Honorable President of India, where I played the main role. So they invited me and my family. The initial set of alumni had contributed to the fund. And now, since then, this was October 2019, now we've seen many other educational institutions setting up their endowment funds. And because of this linkage with the endowments, the alumni who work with us, they work very passionately with us. So they support us, whether it's deal sourcing or due diligence or value creation in the post-investment and even exits. So it's a very, very interesting model that we've created over time.
Fantastic. And before I move on, again, I'll give you also an opportunity to give a bold statement here today about, Asia, Berlin, or Europe, Berlin connection, Europe, Asia connection, particularly when it comes to the investment scene. So what is one of the things you want the audience definitely to take away or to tweet about?
So, yeah, I think, I've seen, of course, India has evolved over time. So you've seen about 100,000 startups in India that are registered. We have, almost 25,000 of them who raised angel or seed funds, 4,000 of them Series A funded, and then about 107 unicorns. And I think we all know that India is now the most populated country in the world. Almost about 800 million people who are less than the age of 30, and we are reaching 1 billion smartphones very soon, and also 1 billion people who are using internet. So I think the opportunity that lies for startups based here, and I see an opportunity actually where we as investors coming from India would love to look for startups here in Germany who have the potential to scale in the Indian markets. We are all seeing the new age technology, especially the generative AI, which has the potential to disrupt everything. So we believe that there could be some of those entrepreneurs sitting here who we could take to India to scale their businesses. So that's what we're trying to do.
Fantastic. That was probably a little bit too long for a tweet, but we'll explore that definitely. And I like the idea on sourcing companies and helping that bridge. Alex, so probably the high-tech Gründerfonds may not need as much explanation here in Berlin, but give us a little bit more of the background, your investment thesis. I think you're running in the 4th fund. Tell us a bit more about your overall investment thesis.
So we've been around for 18 years now. We started in 2005, and the government, the Federal Ministry of Economics and Climate Action, I guess, is the majority shareholder. But then on top of that, we have in the current fund 45 large and medium-sized companies. So our focus is seed and tech. So the more complicated it is, the more techy it is, the more we like it, because we believe that the strength of the USP and the value creation very often is buried in great technology. And what we can provide is lots of experience. We have done 700 investments over the last 18 years, sold 174 IPOs. And we have a huge network to our fund investors, which is 45 companies, but also to many, many other companies that we sold our portfolio companies to. Lots of experience. We've seen every positive and negative thing you can see during the life of a startup. So our value proposition is really to get you started. You need to be younger than 3 years, so it's what we consider the seed phase or starting phase. Get you started and support you to set up to be successful raising follow-on funding.
But actually, your ticket sizes are quite considerate, right, already. I think you mentioned about 800K, even for the early stage companies. That's quite a lot.
The actual fund is really large. It's 500 million, but we spread it over 200 companies. Okay. So in the initial seed round, we invest up to 1 million, typically 800,000, which is quite a lot of money, but it's not huge money.
Okay. And you have to be a German founder or a German company? What are kind of like the rules for...
I mean, ideally you are incorporated in Germany, but if you're not in Germany, you invest 30% outside of Germany, mainly Europe. You have to have a German angle, which is a subsidiary, and a German, I guess, business case.
Okay, very good. Do you have a bold statement or a thesis that you want everybody to walk away with?
Well, I think, I mean, what we've seen over the last, actually decades, is that innovation keeps accelerating. And we see that really, really clearly today with like AI. It's amazing how things accelerate. So the point really is, with exponential speed, if you're slow, you're over proportionally falling behind. So it's really important to be fast and then adjust really quickly. And it's really hard to imagine an exponential trend. And we're not very good at that as humans, because when we were created basically in the Stone Age, then everything was very, very linear, very slow. And I think, and that will never end. It will never end to be really, really fast and ever increasing. So the statement really is, innovation was never as fast as today, and it will be never that slow. And that's hard to really, really comprehend.
Interesting. That's why an increased focus on deep tech?
Yeah, deep tech and,
makes sense.
and also focus on new things. Because when we started in 2005, there was no blockchain. And there was no, I mean, we didn't see any quantum deals until like 3-4 years ago. There were no, now we're seeing more space deals. So we do have some verticals that we like, but we also like to be surprised, to be open for new things, which is very important, because things will show up that we didn't think of.
Super interesting. Thank you. We'll get into that a little bit more in detail. But first, Teddy, partner at APX, I also announced already, or you got to talk a little bit about Heartfelt as well, which is really exciting. But tell us a bit more. I mean, Axel Springer and Porsche. I mean, how did this all come to life? What is your investment thesis?
Yeah.
How do you operate?
Yeah, so I'll start with what we do, and then we'll work into why Axel Springer and Porsche are part of the name. So what we do is we try to invest into as many first-time founders as we can across Europe. We particularly look for what we call under-networked or underrepresented founders across Europe. Most often first-time founders may not have access to angels, maybe 2-3 connections away from angels, but are still struggling to get over this, what we call pre-seed gap, both in terms of funding, but also commercial support to launch your venture. So we've actually co-invested quite a few times with Alex and the team, so we're a bit upstream in terms of the stage with those companies. So we make one new investment a week. We are sector agnostic. Last year we made 56 investments. Of those, 40% were female founded, and we represent over 30 different nationalities, most often immigrants amongst those founders. And we invest all across Europe. Because we started in Germany, we still have about 60% of our 187 investments in APX are German-speaking companies or founders, but more and more we try to branch out across Europe and go where there is a lack of capital and a lack of support. That's a big part of our thesis. In terms of our name and how we try to fill this gap in terms of the commercial side, is we work with our investors. So in APX, over the past 5 years, we had a joint venture between Axel Springer, which is a digital media group headquartered here in Berlin, and Porsche, which is a car company, which is a bit random. So there's no strategic angle in terms of the investments by these two corporates. It's financially driven. However, they both wanted to have a pulse on where is innovation going. They don't know where the future is going to be, similar to what Alex was saying. So how do we stay abreast of that type of innovation? And when it makes sense, can we actually start working with them? And it might be something that might be a nice dovetail to the next speaker here. So about 25% of our 187 companies have a commercial arrangement, so dollars or euros being traded, between at least one or both of those corporate entities. That's not by design, but because often the innovation that's going on, also in this room, if you're founders, is solving for problems that large companies, small companies will have. So that's something we also try to help address. Moving on to...
Just before that, just to again clarify, it's interesting, I see we come from later stage and we're going earlier and earlier. So your first ticket is 50K, right? That's what...
So it was 50K until 4 weeks ago because we stopped
That's the link
investing.
to Heartfelt.
Yeah, so we stopped investing from the APX fund 4 weeks ago. So the past 5 years, we invested via a very, very simple mechanism, 50,000 euros as a standard convertible. And we try to close those investments within 4 weeks, usually 3 weeks after meeting a founder. Now with Heartfelt, which is our new fund, which we launched 4 weeks ago. We are now investing 100,000 euros in the same timeline for a standard convertible loan instrument. And for both APX and now Heartfelt, we want to maintain that relationship with our founders and accompany them on their journey from really the beginning days of an idea till at least Series A, until we have Alex, other co-investors on the cap table with us. So we'll try to invest at least up to 800,000 in those companies that get to Series A.
So is it convertible loan with a discount that converts into the next round?
Exactly.
Completely.
Exactly. So to explain how that works, we just invest our cash. We don't know what the valuation may be sometimes. Sometimes we do, but we invest that to basically make it really easy to get funding and just help the founders start building and executing.
Yeah. Super interesting, really spotting talent, right? You said the whole thesis was about overlooked talent that you're
It's
finding.
all about team for us.
Yeah.
I mean, yes, there will be ideas and like hopefully a little bit of validation in terms of we think this is our customer, we think this is the pain they're having. Almost every single investment we made over the past actually 10 years now, we've been doing this as a team, it's pivoted in the first couple months.
Yeah, that's
Fantastic.
the key skill to pivot. What's your failure rate? Can you share it?
It's too low.
Right, exactly.
yeah.
We'll get into that for sure. I know that's obviously one of the questions I have as well. And if you understand that his team is only 17 people, we'll get into that. I just
We
want to
don't
make sure
sleep
we 1-7, not 7-0. We'll get through the whole introduction, but a very quick, bold statement. I don't know if you can give me the 140 characters.
I'll try to keep it short.
Okay.
We need to invest. Oh, sorry, it's not going to be 100.
More?
We need to invest in
Uh-huh.
one new company a week. We want to hit over 50. We did 6 in the last 4 weeks for the new fund. If there are any founders even thinking of an idea, please reach out to me.
Fantastic. And by the way, I'll let you guys talk afterwards and I'll have a coffee. But I first want to make sure we introduce actually Shrenik as well. Because super interesting, as you could see, different stages of investment and now the model of a CVC, right? I mean, that's why you're a corporate venture capitalist. Tell us a little bit more about your investment thesis.
So the Aditya Birla Group is a...
Working on.
It is. We are a diversified multinational conglomerate. We are headquartered in India, but we have presence around the world. We're about $60 billion in revenue. About half of that comes from India and half of it comes from around the world. And our vision really is if we have to grow, if we have to, let's say, double our size in the next few years, we have to really take in a lot of innovation. And that's what I drive for the group. So I work with all our businesses. So this is the world's third largest cement company, the world's largest aluminum downstream company, India's largest fashion retailer. We have several chemicals. We're largest in the world, and so on and so forth. So we really believe in scale. And we are here to look at the possibility of partnering with the innovators and the startups in Berlin. And the bold idea I have in my mind really is to grow together, to co-innovate. And we adapt the ideas so that they apply at scale. And then we can not only take it to India, but also to the other parts of the world. So we offer that partnership thesis to startups around the world. It's our first time in Berlin, and we're super excited to be here.
Fantastic. And again, maybe to help the audience understand a bit. So you work actually with over 120, right, or 125 startups, but you only started making investment into
Just started.
Like
It's a much it's a much slower process because we work with the startups. So we're just beginning to make investments. We've made one that was about $4 million in the US. Just hard technology. And it can be a range of subjects. It can be anything around our product footprint, or it could be AI or sustainability. Sustainability itself could include water and air and chemicals. And there's so many things. And we're looking at another 7 this year and maybe another 11 the year next. So it's a slower process but that's how you change the world. You change it.
Fantastic.
Slowly.
And really reassuring, you come from an entrepreneurial and an investor background, right? So to help the corporates run that successfully. So we'll go through and we'll address some of these questions now exactly. And what I would love, and I'll start with you this time, if you just take a very concrete case study, maybe one company that's dear to your heart, one startup that is a good example of a success or maybe of a failure, right? And how help the audience understand, how do you find these companies, how do you vet them, do you help them afterwards to become successful?
So there's just so many examples I can quote.
Your favorite?
So
the most successful or the worst? I don't know which one. I'll let you, Alex, talk about the worst.
The worst is easy. I mean, founders who you take the money, party, and take off. That's easy. But it's really the worst because you totally didn't understand the person. I think there's many the best in terms of like valuation, revenue, and everything. I really like those, and Theodore said it, who go in the wrong direction, are about to fail, and then really pivot and come out well, not huge successes. One company, and I think maybe it's interesting, the two guys out of university, they did their PhD in the energy management space, came with a pitch deck 10 years ago, and then what they did was a virtual power plant. So they activated biogas stations when there was power lacking, and then they took them off when there was too much power, and then they activated demand and demand response. So, and we sold the company 2 years ago before the Ukraine war to Shell. And during the Ukraine war, the grid was very stressed, and the company that we already had sold to Shell became very instrumental in stabilizing the grid, and also very profitable. So in those 2 years that we have sold the company, that Shell got the whole purchasing price in terms of profit back. So we sold too early, I guess. But why is that a great company? Well, I mean, it's a great story right out of university with a pitch deck and a huge impact on society. And there's many huge impacts in terms of medicine, biotech, and other areas. But in the current scenario, I think it was a huge impact, and I think that's great. And we never would have thought that. So
I was going to ask, I mean, how many of these founders straight from university with just a piece of paper do you back?
So we tend to move a little bit later. So we want to see first traction somehow. And I still like it a lot. I mean, that's your approach. You look at the founders, and then you are convinced that they're going to make it. And I think that's where the money is the most difficult to get. So I think that's really the sweet spot of heartfelt and high-tech Gründerfonds, because it's the most difficult phase. But it's also easy. There's nothing to check. No annual reports, no contracts, no history, because there's no history. So I like it.
I mean, nobody could blame you on a bad due diligence, right? In terms of that, that's true. I agree. But I think actually, Shrenik, you had an example as well, right? That came to mind. So I'll try to.
We have, just because of the width of subjects we work with, there's just extremely fascinating technologies and inventors we come across. Yeah. We're working with this water filtration technology, which is this innovator in Singapore. And so they have beaten the best technology that we have by a great margin at half the cost, just by materials innovations. So there's that example. There is.
And how did you find this company? So, I mean, do you have partners trusted? Do you have a network of partners? I mean, typically people say venture capital is still a cottage industry. Like everybody, I mean, once you're in the big boys club, then the deals just go around the table? Or, I mean, how do you source your deal flow?
Yeah, we have to break out of that echo chamber. So we do a lot of work with governments around the world. We work with, of course, a few advisors. We have 300 manufacturing plants around the world. So we have people all over. So we have lots of ideas coming in through there. We have, of course, friends like Vikram, so venture capitalists who are also very smart in spotting ideas. And we put them through an operating test of really working with one of our businesses in some way, and that really helps us to distill the ability of a team to scale and deliver, and also their mindset on partnering.
Very good. Teddy, your case study that you would like to highlight. And again, I'm super intrigued. I mean, how do you choose the talented ones?
I mean, I think it's more of finding people who choose one another is how we think about it in terms of creating that investor-founder fit. We basically ask 3 questions, and I'll get to the case study as part of this, but when we meet founders, we just want to understand 3 things, basically. Why you? Why this? Why now? And if the founders can really answer those 3 questions and show that they can think deeper and make decisions as a collective group, not one individual saying this is the way it's going to be, but we have a collection of different skills and experiences across our usually younger team, and we have ideas about how to address these three things in the beginning, and then later we'll see how things pivot. And actually, I'll tell a little bit about how we source our deals, because I think that'll be great. It'll lead really well into the case study. So we do rely on some of the other VC community folks out there who do shield deal flow with us. Basically, I used to be we had another VC in London where I used to work, where I hated saying it's too early for us. Like every VC says this and founders hate it. I'm a failed founder myself, and I hated it when VCs are like, oh, it's too early. It's like, it's because you don't have damn conviction yet. I get it. It's also not part of the stage.
It really means you're not good enough.
Usually, yeah. But we can't say that. We can't say it's too early for us, and I love that. And that's why a lot of the other VCs and angels, we've co-invested with over 650 angels in Germany alone now, will send us deals. But that's not the best deal flow. For us, the best deal flow is a combination of two things. One is we've tried to build out a venture scout network. And this is what I was alluding to earlier about going to places where there aren't a lot of angels or micro VCs or local geographic VCs. We want to actually be on the ground, whether it's alumni at different universities. It doesn't have to be the top universities for us. Of course, we want that too, but we want to have a diverse approach. Where we want actually the people on the ground to send us stuff and say, our friend who's an entrepreneur is doing something really amazing. They don't have a clue about what it means to build a VC case, but maybe we can work together on that. And that's the founder-investor fit that we're looking for. So that's one, and I said there's two. The other two is I have this dream, I think our team shares it, is we want to make it super easy for anyone to send a cold email and get the same attention as a warm intro, right? I hated it when I used to live in Silicon Valley that people are like, there's an art of the warm intro. Like, no, screw that. If you have merit, it doesn't matter if you're 5 connections away or 1 or half a connection away from someone who is a steward of capital. If you have the merit, you should get the attention. And that's what we really try to do. We spend money on Google, but that's not the best way, but we actually try to build our own product. So over the past 2 years, we built our own digital community. It has a terrible name because we're not very creative, at least I'm not. It's just called apx.network. I think we'll call it The Network now, but it's terrible. If anyone has a better name, please let us know. We'll give you credit.
It was a new Netflix series, but yeah.
Yeah, it could be a Netflix series. Basically, we want everyone to just be on there. Scouts, people building solutions that may not be a VC fit, but still want to share stuff that's going on, and for us to give it a real hard look, no matter where it comes from. But anyway, so this is to the case study. So I think I can name the company because it's all on Twitter, actually. So the company is called Bonnet. It's in the UK, based out of London. It's basically creating an easier way for EV drivers to find charging points and do the charging in one place across many different systems, across different infrastructures. The founders, 2 different founders, very different backgrounds, very diverse. I think they spoke with 35 to 40 angels before they came to us, and the angels were like, it's too early. And I think they found us just online. I don't think we were at an event or anything. They just reached out, sent us an email, and we were like, cool, let's invest. We like you guys, how you think. It doesn't matter if 30 other angels were like, it doesn't make sense to me. We don't care about that. And they struggled to raise their first follow-on round. So I think our colleague, Jakob, who now works for Bonnet, which is a great case study, I think he made like 80 different intros to different VCs across Europe. As part of our digital community, the network, we have 1,006 investors on our platform where we do co-investment deals with. We don't charge anything. It's in the best interest of our founders. So we did 80 intros, and none of the other VCs were like, we want to jump in. Until finally, I think it was Imperial Labs, because there was a connection to Imperial University in the UK, put in a ticket, and I think a local VC in the UK did a small ticket. And then they kind of treaded along, doing their thing, solving problems, pivoted a couple times. And then they landed on something where there was a true value proposition that clicked with the ideal customer. And then basically within a week, they closed with Lightspeed, Google Ventures, and a couple other top VCs globally. And now they're well on their way. TBD if they actually are successful, but so far it's a journey. And that's the journey that we're looking for.
I think I probably would need to do a round as well with the failures afterwards, because that sounds really beautiful. I just want to pull in Vikram again, because that whole network approach, right, again, which is a little bit the IvyCap model. One specific success story you want to highlight, and maybe we can afterwards transition to another topic that we wanted to explore, which was about scaling across not only countries, but even regions, right? But I'll let you choose your case study first. I'm not sure if it's a good case study also for the cross-continent.
2015, we met these two young entrepreneurs who knew nothing about beauty, but they wanted to sell beauty products. And they were very early, and their story was they want to sell these beauty products through this tech platform, and the platform will try and understand the persona of their target customer. Therefore, they don't have to store inventory. They will understand what the customers really need, and based on that, they will put their products online. And they were doing about $100,000 a month of revenue at that time. We put in $2 million of investment to take 30% stake in the company. And they struggled after that as well to raise the next round. Almost for 2 years, they just were not able to raise the next round. Market was also bad at that time. So 2019, they raised $35 million in a round led by Goldman Sachs. And then 2021, we sold our $2 million stake to Sequoia for $45 million in a fund size which was $40 million. So this making this as a dragon in our portfolio. So the dragon is a company which gives you more than 1x cash returns of the entire fund. So this actually became India's first dragon in an Indian VC portfolio. So, this is a very interesting case study. Now it's actually a case study in India in terms of how a VC fund created a dragon in a business which was otherwise not understood very well at that point of time. And I think very quickly, another company called Clovia, which is actually 2015, again, $2 million for 30% stake, incubated by a German and Indian accelerator put together. The company was originally called Moods of Chloe because the company here was actually Chloe Holdings in Germany. We changed the name of the company to Clovia. We helped the company scale up. And last year, we sold the company to Reliance for $130 million. It was a very good cash exit for us. So these are just two examples, just for your...
No, absolutely. Let's dig a little bit deeper into the why and how. You said we said like they became successful. Like why really? If you could pinpoint, I mean, it's always a perfect storm. And you say you helped, right? And maybe let's put that into the context of helping cross-border. I mean, how can we maybe foster more success stories that show, Asia and Europe have a reason to foster bridges? Yeah.
I can say, a year ago, I was traveling with Philip Rösler, who was on stage this morning, to Vietnam, where he originally comes from. And because of his history, he can open every door. I mean, we saw the president, we saw the CEO of a media company, of Windfast, the car company, and many other companies, and ministers and everything. And he said it. I mean, Vietnam, 100 million people. It's growing by 1 million per year. Very young, very innovative, and not really a democracy in our world, but a very stringent government, which gets things done, which is in a way positive. And I thought, oh, whoa. This is a small country in Asia, and there's many more countries, much bigger countries, and we're totally missing the growth opportunities in Asia. And from a German perspective, you grow in Europe, and then you move to the US, and then you get bought. And I don't really know, but out of our 700 companies, I don't think we have many companies that have significant revenue anywhere in Asia. Some have a little bit in China, but it's difficult, and then there's other countries. So I think, and that's why I agreed to be on this panel, where's the link to Asia? I think it's a huge opportunity to cooperate. Also in the other direction. For getting access to the European market is very difficult, very complicated. And it's not just growth. In Vietnam, I mean, of course you have coding, but you also have engineering, at a higher level. And you have large companies, and young people, and talent, and dynamic, and different perspective. So I really, really think we should reach out more, and we should, and that's why I think it's great that we meet, to try to open doors for the companies in any direction.
So is it as simple, we just don't know what we don't know? So just going there and discovering for ourselves, is that the biggest opportunity? I mean, Teddy, how do you assess talent cross-border, cross-boundaries?
I mean, we focus on Europe broadly through APX and Heartfelt. In our previous life, we did invest, I share with our colleagues here, in one Indian startup and one in the Philippines and somewhere else. In each of those cases, I mean, N equals 3, but in each of those cases, we needed someone who really understands the local ecosystem. Because one, both in terms of operations, where the business is going to generate hopefully revenues. Two, in terms of the local co-investors who will probably still dominate in the short term those follow-on rounds. And also much later on, I know the exit market is much more global these days, as Vikram was saying, but still, I think there's going to be a little more local focus on in terms of exits and things like that. So I think for us, for me personally, it's really understanding which local partners can we work with. Both in terms of investors, commercial partners. Some of our companies now have just started raising with, I think we closed our first round with a Japan-based fund 3 weeks ago. And that company is launching their product in Singapore, but also in Germany and Italy. It just made sense for that one company. So it's N equals 1. And in my old fund, there were existing bridges that were being forged, I guess, along the way, with parts of the Middle East, and we were talking about that earlier, where there was an incentive to bring in either innovation or other things. And you'll see that in other capital cities in Europe, like London, for example. There's been a long history of China Equity Group, for example, having a fund based there to bring innovation into the country. So I think some of those bridges have been forged. I think it can start on a stage like this with founders who are looking to build solutions. I think it also requires some government interventions as well. So I don't know if there's anyone in the room, but Alex, hopefully.
Just a very brief sentence. I think we can learn a lot from each other. And I think your approach to feed back some of the profits into the university system, I've never heard it. And a big question in Germany is how do we get the stuff out of the universities? And I think that's great.
So yeah, in fact, from our first fund, we recently got carry, which we actually gave back to the universities. And it was amazing because we actually now helping them to feed into more innovations and seed stage startups in the campuses. So that's actually bringing a lot more innovation in the campuses. So that's exactly one of the things which, and I think to the other point, the question you were asking, I think there's a lot of information now available, online, right? I mean, you ask a question to ChatGPT, it will give you tons of information, right? So I think it's a lot more about taking that additional step to actually look for opportunities and think a little bigger, and I think of the world as your market rather than just a particular geography. And I think startups who are actually really thinking about the world as their market, I think, are actually scaling up much faster. So, and there's a lot more support available now these days. When I started IvyCap, there were just about 7 VC funds in India. Today, there are 1,100 VC funds in India, right? So look at the growth which is happening and the number of people willing to put their money behind startups.
In particular, last 3 years, right? We said pre-COVID, I think India had less than 50 unicorns, and now we're
in the year 2021 itself, we had 44 new unicorns in India.
Yeah, absolutely. I think actually, Shrenik, you had one of your case studies was a company you scouted in Singapore, right? So again, how do you have the means, right, as a multinational corporations actually to scout different companies anywhere and to catapult them into a business unit somewhere else, right?
Yes, we do. So we're actually working with startups from around the world. We work with more than 50 startups now, a lot of them from the US, from Canada, from Europe and other parts of Asia. And I just wanted to build on that point about the global market. And, we're seeing us as another partner in this innovation ecosystem where we can take an idea laterally across markets just by virtue of our presence. And the major axis for us is really just deep science. I mean, there's lots of stories of entrepreneurial grit, of seeing changes in consumer patterns. So that's one way. But we have just by nature of what we do, we're working with just deep science. How do you convert, for example, concrete into carbon absorbing rather than carbon emitting? How do you use the power of AI to build better alloys with aluminum? For example, the iPhones and the EVs, they're all made with aluminum. But how do you recycle them if they're different grades? How do you make fashion recyclable? That's the problem that's not been solved in the world. And how do
Second
you
highest polluting industry, right?
It's crazy, yeah. And you know, how do you use biological processes to replace chemical processes? How do you use digital technologies to make buildings smarter? Just deep areas of science. And so for us, that has been a big access for you know, finding success.
Yeah, fantastic. Is there any like pitfall or so that you experience by taking companies out of their home market and putting them somewhere totally different, geographically speaking? Or in contrary, like amazing success story because actually the solution they were building was so much more adequate for the problem in a different market?
Well, in general, I think the world is knitting closer for the most part. So what we did was we came up with our own approach of a partnership framework. So we call it co-innovation, where we our insight really was that innovators innovate for what they see around them, and that's not the whole of the world. So they need someone to help adapt their innovation to other situations. These could be just different operating environments or different cost environments, different adoption environments, and that really enables them to achieve scale. And so we design a co-innovation path with every partner that we work with, and that's been actually very successful for us.
Okay, great, thank you. I actually see time is running really, really fast, which is horrible. So just, you know, my entrepreneur heart is beating very fast right now. I think a lot of entrepreneurs who would love to ask the question in this very interesting times right now, which we could probably describe a little bit as an investment winter, right? Where should founders go to raise money, maybe geographically or any other tips? And are certain things becoming more or less important? Are we beyond the traction is everything? No, money is not cheap. What are you guys looking at? Something differently or not? Tell us more. So where and how, basically?
I say something you cannot quote me on. I think venture is about, you know, innovation and growth and fast growth also, and I would really check. For whatever you want to do, what the best environment would be. And it could be outside of Europe, because Europe is being strangled by many, many things. I don't want to detail right now, but it could easily be Asia. So when young students or so ask me, where should I go? What should I do? What would the best first job be? I always recommend to leave Europe and get work experience outside of Europe. And then if that's the best place to found a company or not, that's a different question. But it should be a very supportive, innovative, a little bit young, because that correlates, fast-paced, high-growth environment.
Gotcha. I think, Vikram, you had a good point in terms of what becomes more important for you as an investor now when you look at metrics.
Yeah, I think these are the times which are hard times for entrepreneurs when they go out to raise capital. Money is not easily available. These are the best times for investors like us, because obviously we have a lot more options.
Better valuations.
We get a lot more time to evaluate deals. There's much less competition. But the way I look at it, you know, is in a fund cycle, which is about 10 to 12 years, there is going to be a bad cycle. There is going to be a good cycle. So if you're investing during the bad cycle, it's good. But from entrepreneur's perspective, I think very important to get your basics right. I think don't raise capital if you're raising it for just benchmarking evaluation. Don't raise capital just because you think that it's fashionable. Don't raise capital just because you think that, you know, you should be raising capital because your competition is raising capital. So I think, you know, if you're raising capital for the right reasons, I think there is enough capital out there. So, you know, we are investing in this time. In the last 8 months, we made 5 new investments with a $6 million average ticket size. Even though the market, we see that almost $25 billion of dry powder sitting, waiting to be deployed in India itself. But I think whoever is taking hard calls is actually able to get good investment opportunities.
And you also mentioned it's advisable for founders to show the path to exit, right? So again, be much more clear in terms of what you offer as a value proposition to your investors.
Absolutely, exit is a starting point. So unless we see an exit path for ourselves, we don't invest. So 5 to 6 year time frame, primarily through an M&A as an exit potential. So that's what we do. Most of our exits have happened through M&A.
Shrenik?
I just want to add just some advice. The insight I gathered, as a group, we are 150 years old, and we sit across so many different cycles, and we've just continued to build. We want to double from where we are already. And just the one thing about capital is just, you should not need that much capital. If you're doing things right, I think just the need for capital is something that needs to be looked at very carefully. From 120 partners that we have, not one has gone bankrupt, because we continue to work with them. And sometimes, if you just do sensible things in normal business, you're able to fund. You don't need to lean so much into the cap table. And that's just hard insight I've gathered working with with the group in the last couple of years. And I think there's just some wisdom in what he's saying. If you go out in these kind of environments, that leads to other problems later on.
Fantastic. I'm actually super sorry because we totally ran out of time. I didn't get to ask the stock picker question, but please all join me in giving a big hand of applause to our fantastic panel of investors. Thank you very much. Thank you. And I guess just talk to them. Just talk to them if you want to raise money.